It's time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Dr. Hwang Seiwoon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thanks for coming on today.
Thank you for having me today, too.
So stocks in New York ended last week down, with the U.S. China trade war putting pressure on American chipmakers. Micron down more than 2%, Intel down more than 1%, Korean stocks down too. What's the story today?
Stocks ended lower on last Friday after a sharp decline in Broadcom shares put other chip makers and the broader tech sector under pressure. The Dow closed 17 points lower. The S&P 500 declined by 0.15% as the tech sector dropped 0.8%. The Nasdaq lagged, falling 0.5%. Broadcom fell more than 5% after the chipmaker posted weaker than expected revenue for the previous quarter and cut its guidance for year 2019, citing broad-based demand weakness and the U.S. crackdown on Huawei. Asian shares showed a shaky start on Monday as investors were cautious ahead of closely watched Federal Reserve meeting, while political tensions in the Middle East and Hong Kong kept risk appetite in check. Japan's Nikkei added just 0.03%, while Shanghai Composite rose 0.28%. South Korea's KOSPI dropped 0.22% as of close today.
Well, now in Hong Kong, the protests are continuing over that bill to allow extraditions to mainland China. Intrabank rates in Hong Kong, as a result, rising to their highest rate in 11 years, and there have been warnings about Hong Kong's credit rating taking a hit. What effect are these protests having on the markets?
Hong Kong's markets may be in focus after the city's chief executive suspended a controversial extradition bill, a move that failed to stem huge street protests Sunday. Liquidity shortages have helped send the Hong Kong dollar higher as political tensions rose this month. Hong Kong is one of the most important financial markets in Asia and Pacific, so investors are paying quite a good amount of attention to Hong Kong's pro-democracy protests. Hong Kong's protests could also affect the ongoing trade dispute between the U.S. and China, and this implies that if the political tension in Hong Kong becomes stronger, then it will reduce the investors' risk appetite, resulting in declines in stock prices. Impact from the protests in Hong Kong could be different across the countries. It is expected that countries with high economic dependence on China will have larger impact from the protests.
Got it. Well, over in the U.S., the Fed is meeting this week. They'll be talking interest rates, of course, also currency measures. So the Fed meeting, and what else should we be watching this week?
Federal Reserve, the Bank of Japan, and the Bank of England all set monetary policy this week. Fed meeting begins Tuesday with a decision and press conference the next day. Officials are expected to debate a rate cut to shelter the U.S. economy, in part from the fallout caused by escalating trade disputes. Investors will be scrutinizing the Fed policy decision Wednesday for signals on the chances of the rate cut ahead. Thursday brings the Bank of Japan policy decision, and this coming Tuesday, the UK, there will be a second ballot on the leadership contest to choose Theresa May's successor as the leader of the country's ruling party. The Group of 20 summit in Osaka this month is gathering more interest from the investors. I expect that the prospect of a major trade deal is unlikely to emerge from a possible meeting between President Donald Trump and Chinese President Xi Jinping.
So a major deal unlikely. Got it. Dr. Hwang, thank you. That's where we'll have to leave it today. We appreciate your insights, as always.
Thank you very much.